Alrighty, good morning, good morning, good morning, good morning. Today is altcoin day. I have been building a long position on GMX. I do think that this could get all the way up to around $80, right? So a lot of juice still left on this trade. In fact, I only have 2 out of the 3 positions that I've been building on this trade. So I am looking to add one more position onto this one before I let the rest ride. I'll be talking to you guys about how I built my positions thus far and where I'm going to be wrong on my trade, right? So you always start with that, the invalidation on your trade. You need to know that before you build your position. I also do have a short position on Bitcoin, guys, but we won't be talking about that in today's video. We did have a long discussion on it in our Mango Discord. If you guys haven't joined, please do so while we are still in the bear market. I've been talking about things that I do not discuss in the bull market because it's in the bear market where people are actually looking to learn, right? People are actually looking to be mango in the bear market. In the bull market, we kind of draw in the wrong people during the bull markets, guys. People only looking for calls, right? So it's in the bear markets that I give alpha to the people who are actually looking to learn. I also have a couple of really cool charts coming on Bitcoin and Dixie, a really super cool relationship that I found that fits into the story that we've been talking about over the past few days, right? And those of you who are new here, if you guys haven't been following the story that we've been formulating and developing, we've been talking about a lot of charts that fit into the story that, hey, are we in a accumulation phase leading into that rising bull market, right? Are we here or are we here or are we here? The inventory flush out, etc., etc. We've been talking a lot of charts, right? Well, I have another really cool chart coming up for you guys, a really cool relationship that I found between Dixie and Bitcoin. So if you guys are looking forward towards that video and you guys have been enjoying this kind of content, please let me know in the comments down below. Please hit the like button too. It's been really motivating to hear your feedback. So yeah, guys, keep them coming. Okay, so let's start with GMX. Here we are looking at GMX on the daily time frame, but honestly, you could be trading this on the 12-hour time frame too and be completely fine. It is a new asset, and the 12-hour time frame did give us a early entry on this trade, right? Allowed us to build this trade, and now we are seeing confirmation on the actual breakout. Now, this structure of the chart over here, if you have been trading crypto for a while, it will be very familiar for you, right? It's a classic consolidation formation before seeing a break towards the upside. Now, don't get me wrong, these don't always see breaks towards the upside, and some people are going to say, hey, this is a head and shoulders, inverted head and shoulders. Some people are going to say, hey, it's not, it doesn't have the volume. In fact, this may actually have the volume for that. But honestly, guys, don't get too stuck up on that, especially when it comes to altcoins, right? What's really important is the consolidation and the breakout of a key neckline, and that's what we're seeing here. This entire zone here on GMX, right? That was a key neckline. And how do you decide that, hey, this might actually be seeing a breakout? Well, when you start seeing these higher lows form, right? Price grinding closer towards the resistance, right? That gives you an increased probability of that break actually happening. Because what's happening over there is, while we are seeing that resistance, right? While sellers are coming to sell against this level, the buyers are equally coming in aggressively to push price back up against the level, right? So while sellers are eager, you're seeing buyers even more eager, right? When you start seeing sellers more eager, you're going to start seeing a downward slope on the sells, right? So over here, you're seeing a flat slope. So yeah, sellers are eager to sell against $47. But if we were to see real bearishness, this would have been sloping towards the downside, and there you'd be seeing buyers stepping in on the flat bottom. That's when you get a descending triangle. But over here, what do you have? You have the opposite, right? You have buyers stepping in more and more aggressively, and you have a flat approach to the sellers, right? Sellers weren't as aggressive. So seeing price behave like this, especially under the current sentiment, made me pause and go like, wait a minute, this chart is acting bullish and this may actually break towards the upside. And like I said, guys, at the beginning of the video, this has a measured move pointing all the way up to around $84 to $90, right? So I'm very eager on this trade. If I start building an early position, that could net me a nice 2x, right? And those are the kind of trades I like over here. So now the question is, how do I build into that trade, right? How do I build into a trade? Well, we do have one key resistance level over here at 47, but right over that, we have a more important resistance level coming at $50. $50 is a weekly level, it is a daily level, so it's going to be key resistance, but more importantly, it is a psychological level, right? $50 mark, the $100 mark, these round numbers are usually going to be psychological levels where people put in their sell orders, their take profit orders, etc., etc. So we had that to contend with. But at the same time, if we do break past that level, you do usually see a impulsive thrust to the upside, and you don't want to be chasing price after that, right? You kind of want to be comfortable in that position, but front running it is a risk too. So you want to build into the position, right? So you could take your position size. Let's say your position size is X dollars, right? Let's go ahead and do X. Take a position size, divide by 2, right? That's your breakdown. Or you could divide by 3 and say, hey, I'm going to build into 3 positions, and that's what I have done, right? I'm going to be building into 3 positions. I have 2 out of 3 positions now. I'm waiting for the third, depending on what price it does over here. I'll either be buying on a retest of $50, or I'll be buying a little bit higher. We'll be talking about that in a bit. First, let me talk about how I built into this position. And honestly, it's really, really simple. Nothing fancy. I keep my trades very simple. You guys know that if you've been following me here. We have this horizontal level over here coming in at around $46, right? Now, again, you could wait for the daily, right? Wait for the daily to close above, or you could say, hey, you know what? I'm going to wait for the 12-hour candle to close, because this has been respecting, right? You can see the 12-hour candles have been respecting this level. So a 12-hour candle closure above this, a full candle, guys, okay? I want to see a full candle close above that. That's going to be enough for me to get 1/3 of my position. Remember, we've taken our X dollar position size, right? Our eventual position size, and divided into 3. So I'm willing to get a one-third position on that. That allows me to sleep well at night. I'm not thinking about the trade too much. I got my initial position. Let's see how it performs. So that was my initial position based off the 12-hour time frame. Okay, so now that I have that position in, there are 2 things that you're concerned about. One, you're concerned about your current position, right? You want to know whether you are right or wrong in that position. And 2, you're concerned about building the rest of your position if you are right on your first position, right? So how do you know if you are right on your first position? Well, you have to guard against being wrong on this, right? And your trade over here is essentially based on a breakout. But the breakout could be a fake out, right? It could simply come back and close underneath this level. Well, that's essentially where you're wrong, right? If you start seeing weakness and no continuation, and instead you break underneath this level, that's where you're wrong, and you simply exit your trade. And at that point, it's a very clean exit, right? You only got in 1/3 of your position, so you don't have to take too much of a hit. And remember what I've always been telling you guys, the cost of business is the loss that you take, right? The small losses you take is the cost of doing business as a trader. And you have to consider yourself a businessman when you are a trader. And each time you're putting on a trade, right, you cannot worry too much about the loss that you could be taking. It is just the cost of business, right? Especially when you're looking for these big alpha moves, right? Where you're looking for such a huge win from around $40 all the way up to $80. Hey, you need to put on a cost for that opportunity to win that trade, right? So, hey, if we did close underneath, I simply get out of that trade. But when do I build that confidence that, hey, you know what, I want to build the second part of my trade over here because I have 3 parts to build in total? Well, there are multiple things you could have been looking at. One, simply wait for a break of the next level 2. As soon as you close above here, right, that's when you get your second part of the trade. But there's something else you can look for, and that's price action and a pullback into a trend level, right? Remember this. I want you guys to note this down. Price action against your levels, and then a pullback into a trend level, okay? So what's the price action I'm looking for over here? Well, the price action was the fact that we saw a really nice candle that baited me into my initial position. I'm using the word baited like it's a bad thing, but it's a good thing, right? It lured me into my position, and then we saw immediate continuation on the next 12-hour candle into the resistance level. Yes, we sold off, but that's not going to scare me off, right? That's not going to scare me off. Why? Because one, we got a green candle. It closed green. It did not close red. So that was a pretty good candle all in all. Yes, there was resistance, but that was expected. You cannot get afraid of that when you're looking for a big trend break towards the upside. So I saw that. I'm like, I like that candle. I'm going to wait now for a trend pullback into my level, right? And a trend pullback on a lower time frame compared to the 12-hour time frame, because I'm looking for an impulsive trust on the 12-hour time frame, which is what we ended up getting. But how do I build into that impulsive trust? Well, you're looking at your lower time frames within your move of your impulsive trust. So if this is a 12-hour candle, you're looking for the lower time frame to have a trend of the 12-hour, right? So the 4-hour should have a structure forming, and that's what we're seeing over here, right? So what I'm going to do now is I'm going to switch to the 4-hour again. Oopsies over there. And I'm going to turn off my horizontals. I'm going to turn on my mango ribbon really quick. And I'm going to remove most of the indicators over here. We're going to keep on only the 10 SMA. That's all you guys need, guys. The 10 simple moving average. You guys can find this on your indicator list on TradingView. What I look for on a breakout, guys, and you guys know this is a very, very, very simple technique that I've been following for years now, right? I've been following Mango. After a breakout, the first pullback into the 10 SMA is usually a bid opportunity. Okay, I'm giving you guys alpha here because of the bear market. After a breakout, right, the first pullback into the 10 SMA is a bid opportunity. And you guys can see that the 4-hour 10 SMA has been consolidating, breakout, moved away from the 4-hour 10 SMA. The first pullback into it is a bid opportunity. I use the word opportunity. Why? Because it's not a certain trade, but it is a pretty high probable trade. Got the support over there, and then boom, impulsive trust, right? Now, if I didn't get this, right? If I didn't get this, I would simply be waiting to, I would have bought here. That's essentially it, right? I would have bought here. This would have been enough for me to say, hey, you know what? I want to get my second position. So this is good price action. Now that I'm already 2 positions in, I'm looking for confirmation to build my third position. And how do I get that? Well, essentially, I want to start seeing strength over here, guys. I want to start seeing strength over here. I want to see a bull flag form, and I want to see a continuation of the trend, right? So we start closing candles above around 55. I'll be looking to add that final third part to my position, right? Now, when am I wrong on all these trades? There are 2 ways I could be wrong in this trade. One, if we simply close underneath this level, like if we break down like in one big fell swoop and we close underneath this level around $47, I'm going to be wrong on that trade. If we actually have a quick move, right? Let's say Bitcoin does something or GMX does something, and we have a quick move down and we test this level, but the reaction is really good and gets bid up, that's going to give me even more confidence, guys, right? If I see a wick off this level over here, right, a strong wick, and we close about 51, that would actually be enough for me to add that final bid to my position, right? So I want you guys to know that down too. If from here I see the next candle sell off, but instead of breaking and closing underneath 46, we see a wick that closes us above 51 or 52, that's enough to actually get me to bid the third position in. So yeah, how we close after sell-off is also very, very important in whether you stay in your position, exit your position, or build into the position. So yeah, when am I wrong? If we close underneath $46, or if we develop a trend, right, and then we break that trend. So at the moment, the 12-hour trend hasn't really developed. We only have the first impulsive move, right? I would not consider this a high or low. The 4-hour is developing a trend, but I'm not trading this on the 4-hour. I'm looking at the 4-hour just to get good bid entries, and I'm building the position on the 12-hour. So if we break the trend on the 12-hour or the daily time frame, that's when you could look to get out of your position. At the moment, that trend's undeveloped because we only have that first high. We don't have a high or low yet. We're looking for a high or low, right? And then do we put a high, or do we put in a lower high and then start a downtrend, right? That's how you get out of your position. 2 ways: lose a level or lose the trend. So yeah, that's me telling you guys how I'm building my GMX position. It's currently doing well, and looking for a move eventually all the way up to around $80, right, where we'll start taking more profits. And finally, before we wrap up, let me just go over all of the key levels. The upper resistance level is coming in at the key psychological level of around $50, to be a little bit more precise. It's around 50.87 all the way up to 51.85, right? So good dollar zone right over there. And the lower resistance level right over here, guys, is coming at $46, right? That's currently where the 12-hour 10 SMA is at the time of the recording, around 46.66 to be exact. Okay, so again, to repeat, $46, first key level, second key level around 50 to 51, and the take profit level that I'm looking for is around $80 to $85. We still have our third position to build, but hey, so far so good. If you guys have been enjoying this content, let me know in the comments down below. It will motivate me to do more of these kind of videos, even on altcoins. And if you guys are new here, welcome to the Mango Grove, and hit that subscribe button so you don't miss the next video. Ciao.